Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So on the gold, as you can see, effect of the CPI report mostly the same as in the Forex market. Here I just briefly repeat the things that I have talked about in the Forex video today. On the fundamental background, currently, guys, we have two major changings. So first one is currently market has turned from the expectation of first scenario when Fed has to move rate from the 0.5% to the 75 basis points. Now we're turning to the 75 basis points to the 100 basis points. Because recently the probability that Fed will change rate for the whole percent had jumped from the 0 to 38%. This potentially bearish moment. Second is a result of the previous one, is that speculators currently will start taking position with the bargain hunting for in anticipation of the whole percent change, because this scenario is not priced in and it potentially is very profitable. So they additionally could start pushing price lower, betting on this scenario. And finally, what we have on the technical side, as in long-term chart, we have the weekly grabber that is not completed and it suggests taking out of these lows. On a daily chart, you could see that market is forming a flag consolidation right above the major lows and the COP target, which is significantly increased chance of the further downward breakout. So because gold market, well, hardly will leave behind, as I said, stops that have been placed right below this area. And there's also some targets incomplete, and actually flag is a potentially bearish consolidation. Recall also we have 1672 incompleted monthly target as well. So it means that here we could get not just some wash and rinse and short-term drop to grab stops below these lows, but it might be more or less consistent downside action on the gold market as well. So that's actually what we're watching for currently on the gold. Yesterday's setup in general works properly. And what we thought about performance and discussed in the weekly report is mostly completed, but of course it was not simple to trade it, despite that in general plan was correct. As we said, agreement around 1736, flag consolidation, potentially interesting for a take in the short position, but every time the most difficult stands in detail. In particular speaking, as we yesterday discussed, what particular point to choose for position taking. Usually there we have the two scenarios that the traders usually follow in such circumstances. They usually either just take the position in general, so they're just taking it and place stop above the invalidation point. In our term, this is above 1736, as we have talked about this recently. This is one approach. In this case, you could get the worse entry price, but in general, you're already possessing for possible action. That makes it overall environment simpler. Alternatively, you're trying to sit at the last moment on the hands, watching for the patterns, trying to get the perfect entry. That's one of the scenarios that we discussed with this possible free drive yesterday. So we said this performance is not reversal. We need to wait for some possible pullback. And if you would like to, you could consider this pattern that might be formed. So they're watching for patterns. And this is always a difficult choice to make in every point, in every moment when you would like to take the position on some big event, but you do not have the technical tools in place to make the decision. So you always have to search for some compromise. And as I almost every time speak about this best compromise is just split your position. If you're not sure, you would like to take the position, you are mostly sure with the direction, but you are not have enough technical background, technical tools for decision making where to take the position. So you don't have the patterns, for example. Split the position, take the 30%, 40%, half of your regular trading volume on the general rules, and then watch for the patterns. If you will get the pattern, you add more. If not, you at least will have the 50% of your position in place and you will be possessed for a possible action. That's just common thoughts on current recent situation, because as you can see, our 3 drive has not been completed. This was the risk that we talked also, that market maybe could not have enough time to just complete the pattern. That actually has happened. What we could say currently, guys, since the downward direction is continuing, market stands in the lower body of the flag. We will be watching for a possible pullback. For instance, if we'll get some retracement to the 1710 area, maybe 1718, if it will follow, that will be considered for taking short position currently. Additionally, theoretically, you could consider a possible downside breakout with a placing stop sell order somewhere below this area. But this is a bit tricky moment, is because target stands too close, guys. If we would have the flag slightly higher, then it will be possible to do. But currently, if you place stop somewhere around, stop entry order, I mean, around 1690, for example, it will be very small distance to the target, and it will be quite risky. That's why in the current situation, we're not recommend to do this. It's better to trying to catch some minor pullback here for position taking. So that's our short-term view on the gold market. Currently, we do not consider yet taking any long position, because we do not have neither patterns, no overall sentiment here, and the recent performance stands not in favor of the considering long position by far.